Hey guys, what's going on? I'm Ron Sneller, registered financial consultant and investment advisor representative. Today we're going to be talking about the S&P 500 index in 2024 and how it was once again a market that was driven and dominated by the Mag 7. So what is the S&P 500 index? Well, it's widely regarded as a barometer for the overall stock market. The S&P 500 index tracks the performance of 500 of the largest companies listed on the US stock exchanges. So the S&P 500 index adopts what's called a market cap weighting approach. So it allocates a higher percentage of the index to companies with larger market capitalizations. So for 2024, the S&P 500 index delivered a total return of about 25%, which was outstanding coming on the back of a 26.3% gain in 2023. So the S&P 500 index serves as this benchmark for the broader stock market. And although the S&P 500 itself returned about 25% in the year 2024, many investors found themselves disappointed as their portfolios did not experience comparable growth last year, falling well short of the 25% index return. So to unravel the reason behind this disparity, along with other valuation metrics, I've got three informative charts that I want to show you that I think you're really going to enjoy and appreciate. So stay tuned. Here we go. But before we get rolling, I would like to thank our friends over at First Trust Advisors LP for putting this information together for us to share it with you. So for more information, follow Brian S. Westbury, Chief Economist at First Trust, and also Robert Stein, Deputy Chief Economist over at First Trust. All right, let's get into these three slides, guys. All right, so numero uno, the reason for the gap between the return on the S&P 500 index versus the return in many investors' portfolios lies in the dominance of the so-called Magnificent Seven, or the Mag 7 companies. These companies are Apple, NVIDIA, Microsoft, Amazon, Tesla, Alphabet. Also, you probably know it as Google, and then Meta Platforms, which owns Facebook, Instagram, those companies. So these seven giants, which boasted a combined 30.6% weighting in the S&P 500 over the calendar year 2024, they contributed to most of the returns in the market last year. So the S&P 500 index, it had a total return of 25%. The Mag 7 accounted for 53.7% of the return. So seven companies were responsible for more than half of the total return. This concentration of performance highlights some really unique market dynamics of recent years and underscores the challenges of comparing diversified portfolios to such a narrow group of dominant companies. That's the reason that you see this big difference. So in 2023, only 27% of stocks outperformed the S&P 500 index, making it the narrowest market since at least 1995. That trend continued last year in 2024, with just 28% of stocks beating the index, marking the second narrowest year in nearly 3 decades. Such extreme concentration hasn't been seen since 1998 and 1999. However, after that period in the late 90s, the market broadened out significantly over the following years. Let's go to the third chart. Over the past 5 years, the influence of the Mag 7 on the S&P 500 index has grown dramatically. Their combined weighting surged from where it was 21.9% of the index in 2020 to over 30% in 2024, the highest concentration ever recorded. The S&P 500 index weights stocks based on their market capitalization relative to the total market cap of all the index components. And the way that you calculate the market capitalization is just take the stock price and multiply it by the total outstanding shares of stock. Now, the performance of these companies has been just absolutely remarkable. For example, NVIDIA's weighting jumped from 0.9% in 2020 to 5.7% in 2024. Among the group, Amazon was the only company to see a decline, and it was a slight decline, dipping from a 4.2% weighting in 2020 to a 3.7% weighting in 2024. Guys, thanks for joining me. I hope that you found this information helpful and informative. As a standard disclaimer, this video is for educational purposes only. It is not meant for any kind of financial or investment advice. If you would like professional assistance with the management of your portfolio or your retirement income planning during these trying times, you can connect with us through our website at snellerfinancial.com or through our social media channels. I've been in the business for more than 10 years, and I have happy clients in 47 states, also in the Virgin Islands and in Washington, D.C. You can book a free consult with me to learn how I can help you. This has been another episode of 3 for Thursday. Again, I hope you found it valuable and informative. Thanks for tuning in, and we'll see you next time.